Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for September 15th, 2019. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.47 rose from 0.95 last week. The total count of securities in bullish or bearish patterns increased 1% to 3,053. The count of bearish stocks decreased 20%, while the count of stocks in bullish patterns increased 23%. The Pirls P&F market breadth summary chart shows us a market now 1 week in bullish territory. Paid subscribers have access to the open office calc data from which the chart is generated. You may become a paid subscriber by emailing s2pmarketsignal@protonmail.com for payment and access instructions, or by visiting us at Patreon. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Follow. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 283 points for the 9th advance in 14 weeks. At a positive 91.37 points, it continues below all 7 tops above plus 100 and continues above the 6 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum. The CCI 20 daily, now in a Woody's uptrend at a positive 130.75, is down from positive 150.60 last week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 26 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. The CCI 20 weekly, in a Woody's uptrend at positive 79.43, rose from positive 34.14 last week. At Friday 8:30 close, it formed a valid zero-line reject long entry signal, continuing upward this week. We will continue following this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive and only 3 of the bottom 5 are negative. Summary: oil services, KBW Bank, and some tech on the top. Gold and silver and REITs on the bottom. Bullish, disk drives continues in the top 5. KBW Bank has entered the top 5. Gold and silver continues in the bottom 5. Bearish, REITs continues in the bottom 5. Oil services continues in the top 5. Computer hardware, semis, and brokers have left the top 5. Focus this week from www.northmantrader.com, quote, "playing with fire," end quote. The following are some key points and charts. This week's renewed move on SPX prompted victory laps by bulls, as the multiple expansion program inspired by central bank intervention and trade optimism once again dominated the market action. Whether these victory laps were justified or were rather premature remains to be seen. From my perch, bulls are playing with fire as stock market capitalization to GDP once again exceeded 144% by Friday's close, making markets accident-prone to unexpected events. the unexpected weekend event of one of Saudi Arabia's key oil production facilities getting hit by a drone attack, shutting down a significant portion of its oil production, being a possible example. Bulls are counting on central banks to fix everything again, as in 2012 or in 2016. Keeping it in its simplest form, the rally can be viewed as a simple front run into the big central bank meeting in September. The ECB was expected to cut rates and reintroduce QE, and hence DAX rallied for 3 weeks straight, right into resistance, backtesting its broken wedge. And of course, U.S. stocks rallied right into the U.S. Fed meeting scheduled for this coming week as well. Bonds were historically overbought, and we saw a technical reaction off of the most overbought weekly bond RSI readings in history. Is it a long-term bottom in yields or simply a corrective move before heading to lower yields eventually? VIX retains its pattern of higher lows in 2019 and could well be on the ascent again, following this pattern of compression. The first test of this will come on Monday, following the drone attack on the Saudi oil production facility. The timing couldn't be more interesting. After all, it could be argued that the recent rally simply backtested the broken 2019 trend while compressing VIX to the bottom range of its flag pattern. Will an interim trade deal be enough to cause companies to reinvest? Doubtful. It may be enough to inspire a year-end rally, but it will not be enough to address any of the major issues and likely disappoint many of the supporters for the trade war in the first place. But because the rally was again headline-driven and not substance-based, we again see a rising wedge and many open gaps below on the charts. The Fed's action this week absolutely must produce new highs on markets this week. If they don't, Powell and crew will stare at a second failed break above 3,000, following its second rate cut action in this cycle. And then, what are we looking at? A double top? No bull market despite repeated central bank intervention? And now a Fed with even less ammunition than before and nothing to show for? As I said, playing with fire. Sustained new highs are imperative here, or this all looks like a failed backtest on the charts, and recent compressed volatility could come back with a vengeance, and bull victory laps will turn into a valley of tears. But there's always a silver lining in bad news. Will the new geopolitical uncertainty be a cause for the Fed to suddenly cut by 50 BP? We will know more on Wednesday. Thank you for watching this week's Pirls Stock Market Commentary video, featuring the proprietary bull bear point and figure market breadth summary chart compiled by Donald Pearl. S2P market signal at protonmail.com. For Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.